Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Thursday, the 28th of March, Bull versus Bear webinar. Steve Miley on the call for Trade Day. Welcome, everyone. A pseudo Friday today, given that it is the Easter Good Friday holiday tomorrow. US and European markets all closed. We do remember get that PCE data. I've been talking about this a lot over the last week. So beware if you are going to trade, if you do trade on the Sunday open, because obviously the market does move around on that Sunday open and moves from where it closed sometimes on Friday, but usually there's not been too much news, so there's not particularly big movements. Obviously, depending on when we get the data that is being released, okay, the data that is being released on Friday, even though markets are closed, we get the PCE data, the personal consumption expenditure data. Remember, the Fed's preferred measure of inflation, it is an important piece of data. So please do be careful if you are trading that on Sunday when we come back. Okay, we'll go through the run through today. There's not much again to say in here. Just as a piece of housekeeping, very unfortunately, guys. So obviously we're out tomorrow. There's no webinar tomorrow. There would have been no webinar on Monday anyway, because even though the US is back open from Sunday night through Monday, and there's a normal week next week, in the UK it is also, and in Europe for much of Europe. So expect potentially a quieter day on Monday because European and UK markets are closed on Monday for the Easter. We have an Easter holiday in Europe as well on the Monday, Easter Monday. So markets are going to be closed in Europe and the UK on Monday. So you may see quieter trading on Monday in the US, maybe less volatility as well. But also, I am going on vacation this coming weekend. I'm away for nearly 2 weeks. I am back on the 11th, but I won't be back. But the first webinar back, and we have no coverage on the webinars. I've spoken to a few people. We were going to line up some people to cover the webinars. Unfortunately, the people that I've asked, I don't think are going to be, able to cover them as we would like them to cover, to be quite honest. So, unfortunately, there's going to be no further webinars. Okay, we will put notes into here. I'll leave a note in here to remind people. I will also put a note in we'll put into the forums, but there'll be no webinars. The earliest webinar, probably back on the 12th. I cannot guarantee that. I'm traveling on the 11th. I'm not sure, exactly when I'll be back on the 12th and whether it'll be too much for us. So hopefully I'll be back with you guys on the 12th. If not, Monday the 15th, okay, of April. The other thing to say is, whilst I'm out, please be aware we've got, I'm actually missing quite a few pieces of events. 3 of our economic events that you can't trade over. So there's the Friday, the 5th of April, is the US employment report. Then we have Wednesday the 10th, we have double bubble, double trouble. We have the US CPI report, and then after that, the Fed minutes, the FOMC minutes for last month's meeting, or say this month's meeting. It was the March meeting, but it'll be in April then. So for the March meeting. So watching out for those on, as I say, the CPI and the Fed minutes, both on the 10th, and prior to that on the 5th, the US employment report. I say the earliest I'll be back is the 12th of April. It may not be to the 15th of April. I'll let you know by posting a message both in the chat that you see here underneath the video streaming and also in the forum. So, but we'll give a definitive answer on that closer to. So at the moment, no webinars after today until 12th at the earliest, maybe the 15th. Okay, just running through, you can see here very little going on. There's usually this is the US briefing from Live Squawk. Usually got about 10 things in here, very little in here. Walla, that was yesterday. We'll talk a bit about that in a second. Time to cut nearing on rapid inflation drops. So we are getting more dovish signals coming out of the ECB, and the German unemployment rises less than expected. So that's a positive, obviously, for the powerhouse of Europe, Germany. You can see as well, if you do use the Live Squawk service in here, which is in the same page as you're watching this, you click through to get the Live Squawk service. The Live Squawk service will not be on, obviously, tomorrow. So they finish in here at 4:15 Eastern time today. At 4:15 Eastern today, they are finishing. They will not start up again. As I say, Europe is closed. So they will not start up again until the Asia broadcast will resume on, it says here, Tuesday the 2nd of April, 8 o'clock GMT, 4 o'clock Eastern. I don't know whether that's I think maybe they mean the 1st of April, but I'm not sure. But no, probably, probably the evening of the 1st of April. But anyway, no Squawk service. So don't be surprised if you don't get the Squawk service coming through. If we look at the data there, we do get what is usually can be mistaken, I think, as important data. When it is important data, it's GDP, right? Gross domestic product. It's the growth of the economy, how fast the economy is growing. So it is super important piece of data. It's very backward looking from a trading perspective. Okay, so unless you get significant revisions in here or it's significantly out of line, remember this is GDP for quarter on quarter for Q4. Okay, so it's very backward looking in here, and hence it doesn't usually have a massive impact on markets. It's important piece of data. It's important for economies. It's important for the long term direction of the economy and long term direction of the stock indices and various other asset classes. However, on a trading basis, it doesn't usually make markets move that much. And then we get a little bit later today, we get Michigan consumer sentiment. That's at 10 o'clock. At the moment, as far as I can see on here, we have no, so 10 o'clock Eastern is the consumer sentiment index in here. GDP, we're getting just under the hour for the US. Okay. We had some data in here. GDP also out of UK in here today, bang in line with expectations, the data, the quarter-on-quarter data for the UK. And as we said in here, the German unemployment rate slightly beating expectations in here. 5 things to start your day. So we're at the end of the quarter, remember, the last trading day of the first quarter in here today. Sometimes that can cause a few little shenanigans, and the market can have some unusual movements at end of month, end of quarter. So if you see the market kind of moving unusually with no real obvious reason, particularly around various kind of fixings, but it might not be around an FX fixing either. It could just be moving randomly because we get stock reallocation or portfolio rebalancing. Don't be surprised, that can sometimes happen. But overall, it's been a stellar quarter. The S&P is going look for 10% for the first 3 months of the year. Nasdaq around 9%. So it's been a really strong start to the year. European exchanges as well. A note of caution potentially around the rising stock markets coming out of JP Morgan. RBC has increased its targets. Goldman Sachs said that even though US stock expenses, there's room for them to go more. I agree with that view. Walla has been on the wires. That was yesterday, though. No rush to cut interest rates. As we said yesterday, though, Walla is a hawk. So a hawkish comment from a hawk here that he wanted to see at least a couple of months of better inflation before cutting. But that means, potentially we could see rate cuts coming, on the timeline the market's expecting, and that's from a hawk in here. No speaker scheduled for today. The protracted down in property market is still in China, impacting on the nation's banks. Again, that's not really impacting onto us and going through the data that we have in here today. So bonds fall and stocks hover on rate cut pushback. So bonds slightly lower in here overnight. No one wants to make bold view before Friday's PCE data. We've been speaking about that all week in here. And then there's Wallace says no rush to cut interest rates, at least a couple of months. We've already covered that. And the same in here coming out of Reuters, no rush with sticky inflation. Some further articles in here. So morning bid, unrushed Fed sees out buoyant Q1. So again in here, pointing to Waller's comments there, but a bullish Q1, dollar strengthening. Oh, that's the same article in here. And I thought how the US stock market rocketed through the first quarter. So this is kind of a look back in here. I'll share these too if you can access these. I haven't gone through these in detail yet, but these sprung out of me. Maybe articles I'm going to come back and take a look at, particularly this one I'm about to share here. I think it's this one. Yeah, this one about the Fed and the potential soft landing and how the Fed is trying to move towards that piloting another tricky soft landing. I think that might be interesting. I haven't read it yet, so I can't say, but this is one that just leapt out of me earlier on. And futures rebound ahead of a long weekend break, obviously with that PCE data. So markets kind of marking time going in, having had a strong push over to near new highs or right up at record highs last night. The Nikkei is actually down in here overnight, 1.5%, but the Hang Seng up about 1%. European exchanges are up slightly. The UK FTSE up nearly 0.3. The DAX little changed on the day, but the French CAC up nearly 0.5%. And then if we go and take a look at the US, why is that not opened up in here? Obviously, it was a strong day, adding around 1% on the major exchanges yesterday. Going into today, we'll see markets little change, marking time as we go into the end of the actual week today, because of tomorrow's holiday, end of the quarter, end of the month as well. A quick look in here on the Fed Watch tool. And here, if we go to, I think the most interesting thing is, well, when we're expecting the first cut. June in here, very highly likely, nearly 61% we get the cut in June. And by July, in here, we're certainly looking for the cut to have been only a 21% chance we have not cut by July. And if we go to year end, this is staying pretty constant in here. The 3 rate cuts around is the most likely bet. Only what's this, like 35% chance of we don't get 3 rate cuts, 65% chance here that we get 3 rate cuts or more. Bond yields actually went lower yesterday, and despite Waller's comments, we actually went lower in yields, but we have had a rebound in here to higher yields overnight. And if we look at our analysis, we're still underlying bullishness on bonds, bullishness in price, that's lower yields, so that should be supportive of the stock indices. And stocks, obviously, with the rebound we saw yesterday, bulls still very much in control with the pops higher that we saw late yesterday. So it's looking positive overall in here, despite consolidating, and we're still aiming, I think, back to potential record highs. Here's the rally we saw late yesterday in here, and then the market in here. Marking time like a flag formation. This is the S&P on the 30-minute chart. So a flag from yesterday. But, in the bigger picture, if we look on the daily chart, we're still very much in that range. Obviously, a strong pop higher. Look at that 13-period EMA working again in here. The market going down close to it a couple of days ago, and yesterday popping higher and up at a high close in here for the S&P, and not far off the intraday high up there. I think we can have a go at that high going into today. So that high up at 53.22 and 3/4. If we go and take a look at the Nasdaq starting off in the 30-minute, not as strong a push higher in here from the Nasdaq, still more in a kind of consolidation phase. And we look on the bigger chart in here, very much kind of more of an indecisive tone. And this is really, I think, showing that the market move is broadening. Okay, the Nasdaq leadership that we saw through much of the early part of this year, the surge high, the Magnificent Seven, the Nvidia rally. Okay, it's not that rally is over, but what we're seeing is the Nasdaq is now underperforming, compared to if we look on the S&P. The S&P back making new highs last week, making another new high yesterday, underperforming, and that means the rally is broadening. And we've definitely seen that. I've looked at various other measures, and that is healthy for the longer term sustainability of the bull rally. I know as a day trader you don't really care about a lot of this, but I think I'm still approaching this very much from the bullish tone. And that broadening of the rally that we've seen more recently is a real positive that is sustainable into the beginning of April. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day for the last day. Remember, the markets are closed. Don't trade tomorrow. Don't try to trade tomorrow. The markets are closed tomorrow. You may be able to get in and try and place trades. Please don't place any trades tomorrow. You shouldn't be able to place trades because there'll be no data. But it might screw up if you leave any resting orders in tomorrow. Just please be really careful. Don't even go in tomorrow, right? Enjoy the holiday. Enjoy the break in here. Watch out for Sunday. Don't forget watching out for Sunday because we get the PCE data tomorrow. And then I'm going to be at no webinars now for nearly 2 weeks. Well, it will be 2 weeks because the earliest I'll be back is Friday I can't remember the date now. Friday the 12th, right? But we'll let you know. It may not be until Monday the 15th. All right, guys, have a great one. Thank you very much, Stephanie. I will try and enjoy the vacation. You guys all take care, stay safe, and I'll be back with you in the middle of April. Bye.